about our wealth strategy today, let me share with you the differences between the Access Club and crowdfunding. So we all know what crowdfunding platforms are, or we have heard about. So I'll explain what that is, and the Access Club. All right. So let's get started with the crowdfunding platforms. All right, crowdfunding platforms. So what is a crowdfunding platform? Well, it's a regulated platform. So it's regulated by, let's say, the FCA, the Financial Conduct Authority in the UK, or any other of these institutions or regulatory bodies in the countries where the platforms are operating. So they must follow certain specific rules and laws and regulations about financial promotions, and it's basically a marketing platform that will promote investments in certain companies. So as a company, they find a way to raise money because they can advertise themselves on those platforms, with the hope that saying we are the best possible company, the greatest investment you'll ever make, and you can. This is what we do. So now, if you want to invest and come along, you can do that, and people will invest in some. In some cases, it can start as low as 10 euros or 10 pounds, and then anywhere up there, you can buy the 500s, 5,000, whatever. Okay, so they will do that. Investors, when they go to a crowdfunding platform, they will always have a limited information. They must go by the information that is available on the platform, and on the platform, it's the minimum legal information that is there. Okay, so in most cases, at least. So investors will analyze that. They have to trust that whatever information is there is correct, and they have to take it or leave it. That type of deal. Say, okay, all right, I think it's good, so let me invest some money in this company. There is no curation, no coaching, no mentoring, no nothing on these companies. It's just a possibility of giving them some money and hoping that something good will come out of it. From an investor's point of view, that's pretty much what happens when they use a crowdfunding platform. They can't negotiate any protection mechanisms. And if there is a success, then they will have to pay 20% of their profits back to the crowdfunding platform. Okay? So essentially, once a company comes to a crowdfunding platform, it sets a target for the monies to be raised. Once that target has been reached, or perhaps has been oversubscribed, then the money is handed over to the company. The crowdfunding platform keeps their share because that's how they are paid. So they will keep a percentage of the amount raised for them, and the company receives the rest. And their job stops there. That's where they stopped. That's it. So that is a crowdfunding platform. It's good. It gives opportunity to retail investors, to participate in many companies. Perhaps some will be good, others won't. But that's how it goes. The trick is to do a little bit in all of them, because in that way, at least some will be successful. All right. So that's one way of looking at it. Now, when we talk about the Access Club, we're talking about something completely different. We're talking about a club for investors who want to create wealth and accelerate their prosperity. So the Access Club facilitates deals and with companies, with private equity companies, so startup companies, but also with real estate, with energy and other strategies, investment strategies, in a way where there is immediate revenue, there is short-term revenue, mid-term revenue, and long-term revenue. So it covers all that. And when the Access Club negotiates with the company, they will put in place a number of safeguards to protect their investment and to protect the investors that come along with the Access Club. So, and this I talk about in my masterclasses. You know, you have all the options, the warrants, the ratchets, you know, the type of cash or how much cash we give, the seats on the board, the different services that we can provide, you know, tech service, legal services, finance service, and so on, marketing, communications, and etc. All right, so we provide all that. So of course, when the Access Club decides to invest in a company, then that's when the job starts, really, you know, because, okay, we make the investment. From then onwards, then we become partners of the company, and we'll do our best to help the company on the journey. So we want to help them to go all the way to to a potential exit. So we create value in the company so that at some point the company can be sold or can be listed in the stock market, and then we get out. We have our exit. That's a long process, usually many years, you know, anywhere from 7 to 10 years. That's what we estimate. All right. So again, when you compare, there is with the crowdfunding platform, we put in place safeguard mechanism. We protect our investments. We do not charge any success fees. You know, that's it. We're in and we're out, and we're not getting anything else for that. Of course, we go through a full due diligence process and the KYC on the shareholders, you know, so we go through about the whole thing. So that's where we are, and that's the difference between crowdfunding and the Access Club. And that's what I wanted to share with you today.